Thank you, ladies and gentlemen. Thank you for coming to listen to our presentation today on Kea Petroleum. And it'll be a little bit different, my presentation today, maybe to the traditional one. I've done one here before, or done probably quite a lot of presentations in my life. In as much as that I think what I'm going to be presenting to you ultimately is a mathematical exercise of gambling on the stock market. But we will go through some part of the traditional process before resorting back to that. So here we have a photograph in New Zealand, in the beautiful New Zealand. It's nice and wet and green, and where we have a production station called Puka, and that license is an area we'll be talking about quite a bit. So to this evening, basically the main things I'll be talking about is a novelty, the fact that we're doing a crowdfunding. I think we're basically the first, or very close to the first, AIM-listed company to be involved in raising money through crowdfunding, and you'll be hearing more about that from the company called Primary Bid a little bit later. Unusually, where there's an extraordinarily high chance that we'll be successful commercially and geologically in regard to a proposed drilling program for the company in New Zealand. The target we're looking at is a prospective 10 million barrels of oil, and unusually, because of the fact that it's a limestone structure as opposed to sandstone, the prospect of up to 10,000 barrels of oil per day, which is extremely high. And finally, that because we'll be drilling this hole, which we'll be telling more a little about in a few moments, through what we call the Mount Messenger sand level, where we currently have producible oil, we would expect to see the Puka production station resume production profitably. So a little bit about Kea. We listed in 2010. There's about 90 million shares or so on listed. We have drilled about 8 holes. We spent maybe 40–50 million pounds over the course of the last 5 years on exploration in the Taranaki region of the North Island of New Zealand. And just very quickly on that, just in case you think New Zealand is basically about cows and milk, the third largest export of New Zealand is oil. And indeed, the Taranaki region is a prolific producer of oil and gas. This gives you the areas we've got. That's the Taranaki bump down the bottom. Taranaki is actually Mount Taranaki. So you sort of, down here is a mountain that goes up about 5,000 or 10,000 meters, and it's just a volcano. And you can see the producing oil and gas fields sort of up and down in this area here. Offshore, there's also oil and gas. So what we've got is our two major areas. There's this area down here and that area up here. We're not talking about that area up here tonight because it is questionable whether we'll continue to maintain it. There's quite a considerable seismic obligation there of about 1.5 million. And we and our partners, by the way, spent about $18–19 million recently on drilling a hole there, which was unsuccessful. Having said that, it was also, by the way, just so that you understand odds, it was probably about a 5 to 10% chance of success. But we were looking at prospectively 1 trillion cubic feet of gas. So it's odds and size. Down the bottom here we have the Puka production area, and we will be talking more about that. So diagrammatically, just to give you a feeling for what it is we're talking about tonight. That area down the bottom there, the Puka field that we had, has drilled, we have this little Puka production. That's the Mount Messenger. That's the Mount Messenger sands going across here. They're quite prolific. And there's about 4 or 5 listed companies around the world that produce oil from the Mount Messenger. Average production from those sands is, lucky when we first started producing there, when we first discovered it, like 700 barrels of oil a day. Sustained production normally drops off fairly substantially, and normally you're in the sort of, let's call it 100 barrels of oil a day is what you think. Over just a little bit across the way though, you've got there's 3 different levels, which is quite interesting. You've got the Mount Messenger, down a little bit lower. You've got the Tikarangi, which is this kind of level. And interestingly enough, there's a further down the bottom called the Mangahewa, and all of them are well known as oil and gas producers. So the Waihapa field, this one here, as you'll see later on, produced about 24 million barrels of oil. and comes from this Tikarangi, it's the limestone which goes across into our area. And what we have defined, which we'll talk a little bit later, is this Shannon prospect. And we drilled another hole a little way before when we only had 2D, and we drilled it down and we actually found this Tikarangi. So we know that we're where the Tikarangi is, and we know there's some oil there. And the oil and gas business, I'm sure you've been told this before, the first thing about the oil and gas business is go drill somewhere near where they're producing oil. And that's the point about the Waihapa. Waihapa is less than 2,000 meters away. So the Shannon prospect is the one I want to direct your attention to, because that's what we're raising the money to go and drill. As I mentioned before, limestone. Limestone's a little bit like a crunchy bar, as opposed to crunchy bar where you've got big holes, and basically you have neutral levels of pressure, and when you drill into it, you can get these massive levels of production from it, as opposed to sandstone, which is the dominant thing throughout the world of oil, where you are basically, you've got to wait for the oil to drift its way through the sand, and you can produce it. It drifts pretty quickly if you're in Saudi Arabia. But so we're into a limestone here, and we are immediately next to the Waihapa field. What we've established, we did in this area, we've spent over £20 million to try and work out how we can improve our odds and knowledge about the area. Oil and gas gambling is about the question of warping the odds. Gambling is about warping the odds. If you go into a casino, we know exactly the odds we're going to get. If you've got 36 on your roulette, you'll get 36 to 1, and the 0 is what gives the odds to the casino. What you need to do in the oil and gas game is, can we change the odds so that you are going to get a higher probability relative to the reward? So we spent £20 million to try and warp the odds. What we did was we've drilled we've drilled Puka 1, 2, 3, we've drilled Douglas 1, we spent money on a 2D seismic, and then recently $5 million on a 3D seismic. We then drilled a further Puka well to go down and establish that seismic was accurate. So when you go and put all of this interpretive work together, you get involved in the business of understanding with quite a high degree of accuracy what you're likely to find down there. We drilled Douglas to find out that we can hit the limestone. We then drilled the Puka 3, and we established that with the 3D was projecting accurately when we would get to different layers. Doesn't mean to say you know everything. You will never know everything from the top until you drill, but you can keep warping your odds. And one of the strongest things you can get is a thing called a four-way closure. Four-way closure is a bit like if you wish a plate placed upside down, which essentially means that for totality of your mapping, it appears that there is no spot where the oil can spill out other than if it is full. So that's essentially what I would call, and those of you who are geologists can tell me later that I was talking complete rubbish. But anyway, that is, as I understand it, what a four-way closure means. Now, this doesn't mean to say that's the only way that you can trap oil. You can trap oil stratigraphically if you've got a seal. But the nicest one is a four-way closure. We have unrisked prospective mean reserves of about 10 million barrels. That means that expected recoverable oil in about a 50% chance is about 10 million barrels of oil. 10 million barrels of oil, approximately on today's prices, around about 500 million pounds worth of oil in ground. And if I might point out that the current capitalization of Kea Petroleum is £1 million, in fact, just slightly less. So when we are next door to a major oil field, and the comparable field there used to produce about 5 million barrels of oil per well, and at a rate on average at around about 8,000 barrels of oil per day. The Shannon prospect is targeted at 2,500 meters, and it is offset slightly from where the Puka site is, and we intend to go through the Mount Messenger on the way. And the importance of that is our insurance policy, which I'll explain to you. Very quickly, I won't stay too much on the technical side, but the reason for that, this thing is just to show you that this is Waihapa, where you produced 23 million barrels of oil. Here is the Shannon structure, and later on you'll see over here the fact that there is great similarities between the two of them. And Douglas, as you see, has come down here. Now, we drilled Douglas on the basis of 2D. And as you can see with Douglas, we have come in at the very bottom of the structure. And what we hit when we drilled Douglas, as you'll see a little bit later, we hit the oil-water contact. Dreadful thing, basically, but essentially it means that you're always got water underneath oil. Oil floats on water. And so essentially, if you find a discovery, you always want plenty of oil above your water. And when you strike your water, then you've established effectively where the bottom of your prospective oil is. And when we drilled Douglas, because it was low on structure, you can see that, sorry, you can see that if we consider that to be the structure, you can see it's low on it. We hit the oil water, we stuck some oil, then we hit water. When we hit them so closely together, we weren't able to test it. Very quickly, the only significant point to take out of this is effectively, once again, that you are talking about approximately 10 million barrels of oil. The significance of this is that when Waihapa was drilled by a number of companies many, many years ago, they were looking to the Mangahewa. If you remember, I said there's the Mount Messenger, the Tikarangi, and the Mangahewa. And they basically thought that they were looking to go down to the known oil in the Mangahewa area, and they went down and they were unsuccessful. And then it took a little bit later, actually years later in a different company, for somebody to have a look at these things here, which don't look like gobbledygook. And he said, this is pretty interesting here. This wet oil contact, and they said, well, that doesn't look very impressive. So it's still hard to understand what this wet gas is all about. And so they went back and they had a look at it, and they found 24 million barrels of oil. Now that, once again, when we drilled Douglas, this is the Douglas hole I told you about, which was drilled on 2D, a little bit off the top of the structure, we came across exactly the same wet gas, almost identical to the same thing that Waihapa. So we're pretty confident that we should be running into oil in the Tikarangi as a result of that. Not too much to take from this one other than the fact that it just shows you how prolific the producing oil wells were in the Waihapa area. And I guess the only other thing to take it from is that, most of us would tend to think, that the top of that upside down plate I was talking about is where you would get the majority of the oil from. And in fact, as you can see here, some of the biggest producing holes in the end actually tended to be on the shelf. So when you actually look, I won't bother showing you, but geologically we have this repeated condition on our own area. Quickly, just to tell you about the Mount Messenger, where we have produced quite a lot of oil. Presently, it's suspended for reasons I can go into. Basically, we're capable of looking forward to, in due course, 300,000 barrels basically per well there, up to 300,000 barrels. We presently have 2 holes down there. They were producing really quite nicely until a outside contractor who comes down and clears the wax in our holes dropped a piece of machinery down at the bottom of the hole. We spent $250,000 trying to find it, and then the price of oil halved, and we decided, look, at $50 a barrel, the economics weren't there about trying to continue to keep the field open, so it was shut. But not until it demonstrated quite consistent levels of production, as you can see over that it's a combination of oil and gas produced during that period of time. During that period of production, we produced almost 70,000 barrels of oil and 6.57 million cubic feet of gas. Not a bad, consistent level of production, and one that we can reasonably look forward to in a scenario that I'll paint to you in a few moments, that we can look forward to in the company as our downside circumstance for what we're presently involved in. So what is the opportunity? What's the mathematical thing I was talking about? Right. As I said to you before, in the oil and gas industry, if you're having a crack at basically 10 million barrels of oil, you'd ordinarily be pretty happy if you're having a crack at something with a 5 to 10% interest of probabilistic success. Because of the Douglas hole, because of the 3D, because of the 2D, because of Puka 1, 2, and 3, and because of Wingrove 1, 2, 3, the level of analysis has been such that a variety of independent sources, including one of the toughest directors I've got, is that we're around about 20% likely to be successful in finding oil in Shannon. 20%. Now, as I've been shown on TV the other day, I said, just remember that's an 80% chance of failure. So that's your warning signal. But a 20% chance of success in this business is an exceptionally high chance. Peter Mickelson, one of my fellow directors, who is a consultant to something like 20 or 30 companies in the oil and gas field all over the world, said that of all of the companies and of all of the opportunities that he presently sees that all of these other companies have, this is the best reward-risk ratio of anything that he presently is looking at. So a 20% chance of success of hitting up to 10,000 barrels of oil a day and prospectively 500 million pounds worth of oil in a company presently capitalized at 900,000 pounds. Okay. Second bit about it is, well, we'll go on to the insurance thing, about the insurance policy about here, but we are capable of putting this production incredibly quickly. It is immediately underneath the Puka production station. All the roads are put in, all the tires in, all the flat thing, all the service facility, power, security, everything is all there. And the Waihapa production station is just less than 3 kilometers away. So if we want to, we can whip a pipeline there, and that pipeline will take it straight to an oil pipe, to an oil port. Very nice. If you've been involved in the oil and gas industry and you start looking at all the places all around the world, anybody tells you that the only thing they've got to do is put a 3-kilometer pipeline in, and they're going to be able to pump it to the nearest existing oil port. You know, they'll go and say, so you are in the nicest place in the world, because most places, there's another little company pretending to be involved in oil and gas production down in New Zealand at the moment, and they will never get anywhere near a oil pipeline or an oil port. So, as a gambler, which I am, the question then is, now I have a 20% chance of success of hitting the oil, but what are my downside situations? Well, what I want to do is to try and minimize the prospectivity of losing my money. And what I'm going to do is, what we are doing is we're going to direct this hole that's going down to test the Shannon to go through the Mount Messenger oil laser, that layer that I showed you before, which has a 50% probability, in fact greater than 50, but I'll call it 50, of hitting oil in reservoir levels and producible levels, a 50% chance. So that when you add it to the fact that there's a Puka 1 and a Puka 2 ready for production, a production station above, and I'm going to go through what I consider to be a 50% probability of expanding my capacity to produce oil, then you will definitely be changing the economics of going back and bothering, especially with the price back up about $65 a barrel. You will now go back to the situation of being able to turn that Puka site back into a profitable producing oil field. You would expect that you should be able to get 100 barrels of oil a day out of this Mount Messenger, if not greater, but at least let's call it 100, and we were getting 150 before, that's 250 barrels of oil. So that is more than enough to cause the Puka production site to be successful. So in other words, if you decide to subscribe for, which we'll be talking about in a few seconds' time, for shares in an opportunity to see the drilling of Shannon, the probability of it is, the high probability is that you'll be investing in a company that is going to be going back into commercial production of oil and gas. That's the high probability. And you have got a 20% chance of making, I don't know how much you think, £1 million, 900,000 pound company should be capitalized that discovers £500 million worth of oil. That's for you to work out. So basically, we've gone on to how are we doing this? Well, as we all know in this room, basically the institutional market, which I've been involved in talking to for the last 30, 40 years, has closed its doors to talking to resource companies, risk companies, and to oil and gas exploration companies. And so consequently, we come across this rather novel thought using Primary Bread, who'll be presenting to you a little bit later. They have offered the first platform for AIM companies, retail investors and institutional investors to actually see if they can be the people to get the discount to market. Traditionally, I would go out with a stock if it was, let's say, 120, 130, pin 1.25. I'd be going to the institutions and they'd say, well, we'll give you your money in at a penny. the retail investor would wake up the next morning finding that the placing had all been done at a penny and they hadn't been given any of that stock at a penny. So here is a situation traditionally this should be a situation, and I'll just touch on it in a few seconds. Traditionally this is a situation where we would be proposing that the retail investor could look at getting it at a discount to the market and raising the £3 million, which is our target. That's the target requisite to drill Shannon. We currently have bids in excess of £1 million. And I have to say that's being raised against the backdrop of the stock diddling around about 95.95 of a p. Now, why is it a 0.95 a p? I'll tell you why it's 0.95 a p, pretty straightforward. I've been brutal in telling everybody, perhaps a little bit excessively brutal, in telling people, look, you know, we may have, if we don't raise this $3 million, I'm not taking a penny from you and I'm going to actually have a fire sale, I'm going to sell everything. I haven't told them what I can fire sale for it for. I just said, we're probably going to actually shut down and I don't know whether to sell it to myself, sell it to some friends or do what I'm going to do. But basically if the stock market has said they're not going to support the drilling of it, they're not going to do anything about it, my present shareholders, my prospective shareholders, you don't want to do it, you know, then we'll take it private or do whatever we'll do. But basically, I have gone and made it pretty grim for an existing shareholder by saying, if you think I'm not going to succeed in getting this £3 million, then you will have no guaranteed result. It's probably a bit harsh, but the reality being that, of course, that it's caused the stock to be a little bit less than a penny at the moment. Frankly, it's irrelevant. The total value of the shares traded today was £3,000, right? So we're valuing the whole of the company as prospectivity, whether this is a good idea or a bad idea, on the grounds of £3,000 worth of shares. A bad lunch. So I don't know. Well, basically what I'm trying to make is the point is that this is a silly thing to look at 0.95 of a p. If you subscribe for and have a crack at the stock at 1 penny a share, it will either happen or you'll get your money back. We will either be involved in the gamble of seeing a 20% chance of hitting Shannon, a 50% chance of hitting Mount Messenger, a 70% chance of the probability of that you're holding a share in a commercial thing, and a 100% chance that if all fails, you either get your money back or you become a shareholder and everything fails, and what is the residual value of the company? So that's the gamble. It's fun. Thank you.
Super. Thank you very much. Do you have any questions for Ian, please? Gentleman over here, please, Chris.
I like this mathematical basis, but to arrive at the 5 or 10 you mentioned, or the 20, is there a way to find how you arrived at that percentage, or does that not matter?
It's actually quite...
Because if it's a number, yeah, that's great.
It's quite mathematical.
Right.
You know, they don't look at a thing and sort of go, I feel that's 20. Actually, they really go down and they assess geological risk, seal risk, whether or not there is evidence of the probability that you'll get a feed from somewhere. You know, they actually go through and they risk every particular thing, right? And then at the end of all of that comes through through a computer and all that sort of stuff. They come up with 19.7 and 20.3 and 18.2 and all that sort of stuff. And you won't get any one person to agree exactly, but the midpoint of a series of different people really assessing every little bit of risk from looking at all the geological data, not my kind of thing, is about 20%.
And is that the standard? I mean, that's the way you would normally evaluate the mine, by coming up with this mathematical basis?
Absolutely, yeah. Okay. Yeah.
So, yeah. Right. And just, Madeleine, what would the oil be, if the oil came out, do you know what that would be based on, what price basis? What would it relate to in the oil world? Sort of Brent, Texas, do you know what?
Oh, it's high quality. In fact, right. The quality of the oil coming out of Mount Taranaki, the whole region, is a premium oil to all oils almost, and it sells at a premium to other oils. Got it. Okay. And it's actually so high quality that it is too good for the refineries in New Zealand, and they have to send it to another refinery. And the New Zealand refineries has to import crap because so
where would they send it to? Which refinery?
They send it actually to Geelong in Kea and in Australia.
Okay. Thank you.
We have a couple of questions down the front here, please, Chris.
You're targeting to raise $3 million, if I understand you correctly. What percentage of the company will the investors that put in the 3 million own? And will 3 million be enough to take you to production?
Thank you. The answer is that at 3 million, the current valuation of the company being approximately $1 million, and the amount being raised being 3 million, the investing shareholders will have 75% of the expanded company. And the second bit about it is because we are literally under a production platform, we can go instantly. Like the first oil that comes up, the thing will be sold a few days later. So we don't. In due course, if you actually really hit 10,000 barrels of oil, we're presently set up for 800 barrels of oil a day. We'll have the problem of expanding from 800 barrels of oil to 10,000 barrels of oil a day, but that one we'll be able to handle.
The 3 million will be enough to take you to production?
Correct.
Yeah. Any other questions from the room? Gentleman over here, please.
Thanks for the presentation. During the last oil price dip, there was some charts in the broadsheet newspapers in England about which mining areas in the world were still profitable, because at a certain, most countries have a fairly well-established per barrel cost per output. What is the approximate per barrel cost of output in New Zealand? And when are you looking to run this auction or fundraising?
Thank you. The estimated present cost, New Zealand is very, very good in terms of oil production costs because it's a sophisticated existing major producing area, and literally the oil pipelines go down past our front lanes. We have already a major oil export per terminal 20 kilometres away. So we're looking around about $35 a barrel in terms of production costs from our site. The second question was when the auction capacity for the auction, so to speak, the crowdfunding is current. Primary bid will be telling you about that a little bit later. But at the moment, it's a question of going on the site and placing a bid, which can be retrieved and would only be accepted in the event that the totality of the funds are raised.
Hi there. You got the heading saying Taranaki license. Is that a government-approved license? And is there a strict guidelines by the New Zealand government? Is if you are drilling out through the brown ground soil, they may be all right with it. But if it was near the green fields, would they have issues with that when it comes to
Thank you for the question.
environmental concerns?
It is a license issued by the government. It's awarded after in a full tender process. We've been there for 8 years. We've drilled 8 holes throughout the area as operator. It is an oil-producing region. The council's 2 sources of income are oil and cattle and milk. So even the iwi licenses, the Maori licenses, it's an established process. There is laws essentially to enable you to drill. There's a little problem of dolphins offshore, etc. But onshore, it's straightforward.
Any other questions? I had a couple of quick ones. You said you've raised, or there's bids for about $1 million so far on the crowdfunding. Is that being mostly retail? You mentioned it's open for institutions as well, or a mix, or do you have any sort of feel for where that's come from?
Well, it's actually if you want, a silent process as to who it is that's in there, and I think that's the way we prefer to handle it.
And if you don't mind me asking a difficult question, Ian, and you said that you yourself, you said you're a gambler.
Yeah.
In terms of management, I know that the company's invested a hell of a lot in the ground already, and I'm sure you've had a part of that. Are you kind of back in on this, or what's your personal view?
Okay, it's fine. If I were not a director of the company, I would put all £3 million in. There's a problem. I think it's a dreadfully unfair thing. I'll give you 30 seconds of it. Being a director of an AIM-listed company is a real bugger, basically. And I lose all the rights that you've got to be able to buy stock, sell stock. If I sell 100 shares, everybody says the chairman's selling. What does this all mean? I've got no capacity to take an insurance policy. If the stock went to 2 pence tomorrow, every one of you can sell the entire of your shareholding. Me sell a share, and everybody's wondering about it. There's a probability that I'd be deemed to be inside a closed period, therefore I can't sell. There's an expectation that I shouldn't be doing any selling. So there are all of the flexibilities that you have as an investor, things that I don't have as thing. I have put a lot of money, millions, into Kea. Most of my friends have put millions into it. And I will be awaiting, I will put money into it, but it won't be what I would like to put into it as a straight gambler.
So then if, for whatever reason, if you are non-successful in raising that 3 million, if you were to sell, go private, you might buy it yourself?
On a private level, I would, once again, I'd be interested, yeah.
Any other questions? Gentleman here, please wait for the mic.
Sorry.
Yeah, so just following on for that question, why wouldn't you go private? Where's the value in listing on AIM for you?
It's a very good question. First of all, private is expensive still. If you talk just delisting as an example, then you still have to produce some audited accounts. You still have to comply with all the requirements of the licenses in America. You have to have plug and abandon obligations. Essentially, being private is still quite an expensive proposition to hold all the licenses with their obligations and with their obligations to publish accounts that are audited to unlisted shareholders. So the only other method of private would be, as an example, as an offer to all shareholders. Then you still inherit all the issues. So private, if it was just privately buying the punt of Shannon, that's a possibility, but it also is subject to shareholder approval. Once again, as a director of the company, the obligations of independent analyses that are required to ascertain and make sure that I or any other party associated with me was not getting it at the expense or benefit of other shareholders would have to be independently ascertained. So, it's as I say, it's an area with complication, even if you wanted to do it for your private benefit.
Super. Ian, I think we're out of time there. Thank you very much indeed. That was fascinating.